The tug of war between OPEC and US oil drillers is playing out in the energy markets. Oil prices are way up from where they were last year, despite the fact that US supplies are way up, a seeming contradiction that has not been lost on energy experts.
Well, it's two moving objects heading in. There's a crash. They're going to crash right into each other at some point. Right now, in the United States, the WTI contract, you have to keep in mind, we have 30 million more barrels of crude oil in storage right now than we did at this time last year. Despite that fact, we were trading $32 last year. We are trading $52 right now. $20 difference. We have 30 million barrels more supply here in the United States, and we're $20 higher.
Oil traders and US-based shale drillers are looking to take advantage of higher prices. Those higher prices are prompting banks to extend credit lines to the drillers for the first time in 2 years. Greater availability of capital will definitely make it easier for drillers to boost their market share to take advantage of higher prices. The North American energy markets have picked up steam while the rest of the world is lagging in what's been called a tale of two cycles. Experts say one reason for this is the more than $2 spread between the two biggest oil contracts in the world, Brent, the international benchmark, and WTI, the domestic contract, which trades mostly in the US.
In other words, WTI is $2 cheaper than the international benchmark. Not only that, but WTI is a higher quality crude oil. You can get more gasoline out of a WTI than you can on the international benchmark. A lot of sulfur in the international benchmark. Send it through the refinery one time, WTI, you get a lot of gasoline. You got to send the international through a couple times, add stuff to it to get the same kind of yield. So it's an attractive barrel, especially $2 plus cheaper. So rather than bring in imports from places where they have a high sulfur content, things along these lines, we'll get it from where we can in the States.
While the outcome of the battle between US drillers and OPEC is unclear, experts say one thing does seem certain: volatility will be the watchword in the energy markets for some time to come.